Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, as always, Michael Becker.
Hey, Paul.
And then also joining me today is James Eng.
Good morning, Paul.
Today in the podcast, we have some friends of ours that have done a fantastic job. They purchased a multifamily property last year, and then in October, November, another one, and purchased another property last week. So they have really done a fantastic job about trying to build a number of units into their portfolio. And so I want to introduce to everybody to the podcast, Venkat.
Hello, Paul.
How are you?
Doing good.
And Ramana, welcome to the podcast.
Hey, Paul. How are you?
I'm doing great. And now I'm going to turn it over to James, because James is going to ask a couple of questions about how did you guys do it? How have you built your portfolio so darn quick?
Sure. Thanks a lot, Paul. So, Venkat, Ramana, thanks for coming into the podcast this morning. Really wanted to give people an idea of how you, in the last 6-7 months, have really gone from 0 to over 500 units now. So let's talk about what initially got you guys started. I don't know, Venkat, you want to kick it off? Maybe just tell us how you guys started in multifamily.
Sure. So I came to Dallas in 2006 on a contract job. I work in IT services and heard a radio advertisement about one of the investing houses here and who's teaching single family and multifamily. So went there and they're talking something about retiring early 30s or retiring 2 to 5 years, something like that, which is a very foreign concept for me at the time. So I was just intrigued and curious, went, checked them out. They have 2 programs, single family, multifamily. Multifamily, I just started working there, so I didn't have a lot of money to play with, right? So I just chose single family at the time and went on to purchase 20 single family properties from 2007 all the way to 2014. That's when I ran out of Fannie Mae loans. Sure. So I wanted to do more because the money is good on the 20 single families, but it's not scalable, which I wish somebody would have told me back in 2006. So then I was looking and I found another investing house around here ran by a gentleman called Brad Sumrock, who I have been watching, for several years, his program, and, a lot of success stories from him. So I went to check him out, his program, and I attended to one of his events, 2-day events. And in that event, I found that, okay, this is the way to scale. This is the path to retirement. And I quickly signed up for his program. He pretty much taught me everything I know about the multifamily. Right? So he gave us step-by-step. He has nice videos, break it down, all the tools I need, and put us in touch with you guys, right? Sure. Lender, I can stress the importance of this. Lender is the most important person on the transaction because he brings most money to the table, period. Sure. 80%, most of the cases. So it's really important that we need to have good vendors, especially the lenders. So we start with you guys, take all the advice, understand how the game works, right? What is that the lender looks, right? Like if you look at the Fannie Mae, DUS lenders, what will they like? What will they not like? So we try to avoid all these pitfalls so that we learn from your experience. And then I partnered with Ramana, who you'll be hearing in a little bit. And then it was a good match, right? So we were able to complement each other's skills, and there's no set times for us. We text, call, email 24/7. There's no time, which is not a good time to communicate. So that allowed really us to stay on our feet and scale real quick.
Now, were you guys friends before?
No, we met in Brad Sumrock's group.
So
no, we didn't know each other 10 months ago. Yeah.
Okay. Wow.
Ramana, how did you get involved in multifamily? Did you have a similar story, or what was sort of your background before starting up, 10 months ago?
So it's kind of similar story, James. So I also work in IT, and I've been doing it for 13 years. Besides work, I wanted to do some venturing opportunities, so looking around. I started buying some real estate in India, and I invested in a software development company in India as well. That made me think, why not in US? So I partnered with few friends and bought a couple of strip centers in Houston market. That's going good. The way how I started multifamily, like I used to travel for my work. And I met one person at the airport who was going to attend Brad's R2R, in the next couple of days. So he sent me the invite. I signed up, attended the event. I learned that Brad is a great mentor. He's an awesome person. He's the apartment king.
He sure is.
So I signed up with Brad for a foundation program initially, and within a month upgraded myself to the personal mentoring program with him, with Venkat and other partners. I sponsored in 526 units in the last 8 months. It's a $27 million worth transactions. On top of that, I also invested in around 500 units passively. So it's been going great.
Now, what has that done for you personally? I mean, going from owning a strip center in Houston to actually buying 3 properties in the last 6 months, what's that done for you and your family? And
there is no time for family.
That's not what I want to hear. I want to hear I have lots of time for my family, lots of time for my wife and my kids.
I know. I'm trying to balance it out.
Yeah.
It's not easy. But one day I have to quit my IT job and I want to move on to real estate, like Becker or like you guys.
Right. So I think the way to look at it is right now it's new for us. It's really addictive. And when we raised the money, recently this happened, right? So one of the investors asked us some questions on the underwriting we did on this TradeWinds deal when we were raising the money. So the email came at about 11:30 p.m. when I'm about to, call it a day. Then I saw that, I'm going to reply in the morning. But then again, I went back and started working on that email, and I just want to make that other person visualize via email. So I ended up sending that email to him with all the information, with the spreadsheets, with call-outs and all that. And then I checked the time, it's almost 2. It's like, I didn't realize that I spent about an hour and a half, more than an hour and a half with them. Then it struck to me, oh my God, I love this. It didn't feel like work at all. It's just, I want to do this. I cannot help myself but to do this. Right? So like from what Ramna is saying, right now it's just so addictive to stop. We can't stop even if we want to. But the idea is to just kick it back in a few years once we have all these properties set up and cash flow come in.
So you're gonna take it easy when you have thousands of units, huh?
Yeah.
I don't think from personal experience it doesn't work that way. You got other problems you got to deal with. So James, I'll kick it back to you.
Yes, I mean that's a great example. I mean, there's a book called Flow, where a guy talks about flow and being able to enjoy your work that much. So it's great that you're able to do that. Let's get into some of these transactions. I mean, the first transaction you guys really signed on as a KP, but your second transaction was definitely more hands-on. So I want to talk about that one and maybe tell us a little bit about how you got under contract on that one and sort of the process on that deal.
So with Mike Becker's help, we finished our first transaction in Norman, Oklahoma. So even before that, like as soon as I signed up with Brad's program, I kind of started looking all over the country, wherever we have landlord-friendly states. So I built up relations with different brokers. After closing this deal, myself and Venkat, we attended a planned meeting at Norman Property. On the way back, we got a call from broker from Phoenix that they have this property. So we pulled over the car into a gas station, spent a couple of hours. We kind of liked the numbers. The only caveat with that property is that we have to submit the LOI within a week because seller, he went with a buyer and he couldn't get the loan proceeds enough to close the deal. So he wanted to make sure that we closed the deal. So he was trying to get all the information beforehand before signing the contract. So we went into the contract. We took another partner's help who is kind of not local, but kind of accessible to Phoenix market. So he can go and visit the property because me and Venkat being in Dallas, it's not so practical for us to go to Phoenix every now and then. So Greg Butcher, our third partner, he toured the property on Monday and he liked the property. We liked the numbers. We went into contract. In that process, the seller was making sure that we go with a lending broker from Phoenix area that he's, a friend of or he's aware of. These guys seemed to be good at the beginning, but by the time it comes to commitment, he wasn't able to deliver the number that we were looking for. So it was kind of deal breaker for us. We went in with some underwriting model. The proceeds that he's getting to the table aren't enough to close the deal. So as a final result, we almost kind of decided, it's not our property. Then, we should get in touch with, what is that company name, man?
Arcadia something.
No, the Dallas local company.
The company called Old Capital.
So tell me a little bit about that white horse and that white hat that James wore to come in to rescue that transaction.
So, let me expand on that. Ramana has been very kind on the other mortgage broker from Phoenix, right? I will not be. I'll tell you like it is. So we started out getting a term sheet from James Yang from Old Capital here. 80% proceeds, everything looks good. We turn it in. The seller is insisting that 80% is not possible in Phoenix, and I don't want you to come here with a pipe dream that you're going to get that 80%. So I want you to go with my friend here on the mortgage broker for two reasons, so that I can lower your expectations for 75% leverage, and also that I can keep tabs on you on what's going on with the loan, right? And the way he had leverage over us is we signed the LOI, he signed, return it back. We booked flights to Phoenix to go room by room, inspections in 109-degree weather there. And I'm already doing it, and I don't have executed PSA contract. It's like, what's going on? So we called the broker who put us in touch, and they said that, well, it's the lender. We really want you to go with the lender that the seller is saying if you still want the deal. They know that we are very much invested in it, so they made us do an amendment saying that, we need to go with the mortgage broker that the seller is requiring. So we ended up going there, and we talked to that guy. Seems to be a very nice guy, and his warehouse lender is Arcadia, I believe. And it was like he was all pie in the sky. It's like, 80% LTC, no problem, all day long. 1 week passes, he comes back and say, oh, actually it's 80%, but it's going to be LTV. And we ran the numbers. Okay, it still works. Okay, let's go. And he came back now 2 weeks after and said that, by the way, the good news is the loan is approved. That's it. It's done. I said, okay, that's good. It's like, then what happened? It's like 75% LTC. It's like, what happened? Okay. At that point, we told seller, I understand that you keep telling us that 75% is the norm for Phoenix, but you have to let us do it our way. Otherwise, we're going to walk. So we played tough as well, and then unhinged ourselves from the seller's hook and came back to James Yang where we started beginning. But here's what we put in front of James, right? We said, James, you got 45 days. This other company wasted all the time. They wasted 3 weeks. Well, you have 45 days starting today, counting today, to close. And by the way, just to make it a little interesting, we negotiated a credit from seller for some of the different maintenance. And the seller, being so savvy, he tied that to the on-time closing of 45 days. Now, we do have an option to extend the contract for another 15 days for strictly financing reasons. But the seller said that if you use it, you will not get that 40,000. And James, I spoke to James over there. I couldn't see his face, but I know that he felt like challenged, but he closed us in 43 days. So we have no clue that this can be done. And mentally, we were prepared to lose that 40,000 because we never heard anybody closing in 43 days. And by the way, we came in 80, and we get so many calls from Phoenix asking us, hey, who's your lender? How is it possible? Because apparently Phoenix is an open disclosure shed, so everybody knows how much you paid for, what your loan amount is and all that. And people calling us is like, how is this possible? We didn't hear, nobody did 80% in Phoenix market. So it was just an incredible story.
Great job, James.
So
James worked his mozo here.
Yeah.
Yeah, so that was interesting because you had to spend 3 weeks on due diligence.
Yes.
And typically that's when, after a week, we like to just get started with the lender.
Sure.
And really get going. So we have, 55 to 60 days on a Fannie Mae loan. So that one, we had the credit tied to it. So we wanted to make sure you got the $40,000 on the sales price as well. So no, that was definitely.
How tough is it to manage a property? You guys live in Dallas. One property you have is up in Oklahoma. Another property you have is in Phoenix area. How tough is it to manage properties at a distance?
So we saw this. I wouldn't say that we thought of every small thing, but for the major part, we understood the limitations that we're going to have doing this long distance management, right? So that's why we partnered with right people. So besides me and Ramana, we give utmost importance to the boots on the ground. There's just no replacement to that. So we partnered with another member of ours in the Oklahoma deal, and that gentleman has another property in the Oklahoma, so he's going to go Oklahoma anyway, and that person doesn't have a day job like us, so that's a given, right? He keeps going there, and this property in Oklahoma, and the Norman, Oklahoma is just 18 miles away from his property. So it's on his way actually from Dallas. So it worked out that, we can have this person actually be the presence while me and Ramana run all the other operations. So it's just shared responsibilities. Coming to Phoenix, again, we were looking for somebody who can be there. I mean, right now, if I can go into Brad Summerall Group and look for somebody from Phoenix, I'll get half a dozen of them, at least, good qualified people. But back when we were doing this deal, we don't have anybody in the Phoenix. So the next best thing was this gentleman, Greg, that we partnered with. He lives in San Diego, and he has a work from home job. So a lot of flexibility for him. So he was up for the task and said that, yeah, I'm going to provide the boots on the ground. And he makes frequent visits, like at least every single month. So we know that we need that, and we solve that by doing some smart partnerships.
So in order for this deal to close, Greg needed to be in Phoenix on that Friday. So we were on the phone with him trying to make sure he got there.
Yes.
Because you guys, I think, Venkat, you were in Europe when that deal closed.
Yes.
And Romano was here.
Yes.
So there was definitely some quarterbacking in terms of getting title in the right spot. So when you came back, the deal was closed.
Yes. I was in Lisbon, Portugal. Fado is the local folklore kind of thing there. So I was in it. My mind was not in it because at that moment, I was roughly about 8 p.m., 9 p.m. around at the time. But that is the time where the action is happening here. So I keep stepping out, checking my email, going back in. But it was just great. I mean, it was little tension, but we got it done.
Any idea why the seller sold that property?
Sure. So the seller bought this property, I wouldn't say deep distress or something, but definitely under 90%. He did a fantastic job in infusing a lot of cash into the property, make it almost look like a B- property for a C-class, right? And he did a very good job repositioning it, all that, but he has a recourse loan, like a bridge loan with a 10.5% interest rate. And the investors didn't get paid for a full 18 months at the time, 18 months close, coming up on 2 years. So I don't know what seller promised to the investors, but what we learned from the broker is that the investors are just not happy and asking them to actually do something about the sale.
And so you guys bought the property 7 months ago?
Yeah, this particular property, October
4 months.
And how's it doing?
It's doing pretty good. We anticipated $65 in the rent bumps, and we are getting a full 100. So that's good.
That's good.
So I mean, a lot of these markets are growing faster, especially on the rent side.
Sure. And
a lot of the value add, they're really. I think that guy came in and it was significantly below 90%. So they spent a lot of money on fixing it up and getting it there. So they really wanted to just get the occupancy, I think, up, and then you got the benefit of now bringing all those rents to market.
That's right.
On that deal. So let's jump into this last transaction that you guys just closed last week, and tell me about that deal and sort of how you found it and got it under contract.
Sure. Again, Brad Sumrock has this service that he provides to his personal students. It's called Box. So it's bradsumrock.box.com. So that's where he houses all these deals that he gets from local brokers. And then he provides brokerage services at very, very nominal cost. I mean, I would say it's almost free. So we just closed the Phoenix deal, right? So we stabilized it. Our first month passed, and I went into the box, saw this email, which was, saw this particular deal called Tradewind Apartments, which is a 306 door in Mesquite. And it's listed by one of the leading brokers in Dallas, Nick Fluellen from Marcus & Millichap. So I saw the deal, got interested. Me and Ramana, we underwrote it, and we saw that, we're just falling short on that. And we did request you the term sheet. You gave us the term sheet. We used it. We underwrote it. We used the rents from the OM for the current rents. We underwrote it. It didn't quite well work. And also the seller was self-managing it. They do have you can call it a management company, right? It's barely a management company. And somehow they figured out that the best way to manage a T12 or arrange a T12 is in alphabetical order. So usually most of the T12s will start with the GPR line, right? Horizontal. Yeah. These guys will start with appliances because it's an A, right? So it's all jumbled up. The Capex and operational, everything is jumbled up. It came up to like 1.9 million in expenses. And the listing broker did his best to kind of separate them out, but still we're not getting that confidence that we can go through with it. So we decided that, okay, we're not going to do this, right? But by the time I have already kept an appointment with Nick Flulan, right? And before that also, what prompted me to actually set up an appointment is when I reached out to James, and James helped me, shared some underwriting that the lender has already performed in this. Then he said, okay, if lender is thinking that is what the expenses is, well, something is wrong here, right? I mean, what I'm seeing in the T12 for 1.9 million expenses can be accurate. Because again, they mixed up CapEx and operational costs, and it's one big number there, right? Which is very funny, right? I mean, for a 15 million property, you would be expected to keep your books better.
And James, talk a little bit about that. You know, there's expenses on properties and there's CapEx. Really, what's the difference on that?
Really, you want to look at on the CapEx side. They had owned the property for a year and a half, and they had spent money that was really one-time items. So they were going in, fixing larger water leaks, doing stuff on the roof, spending $10,000 a unit on some of these interiors, and they just put it all and expensed all of it. And so in that T12, there was R&M that typically might be $1,000 a unit was $2,000-$3,000 a unit. Payroll was significantly higher. And so things that once you normalize a lot of that, the expenses came down significantly and the deal made a lot of sense.
Yep.
Came down to 1.6.
So from 1.9 to 1.6. And again, if it's all lumped together, what's the problem on the lending side?
So, I mean, obviously, if it's all lumped together, the lender is going to take the highest of it all. And so it's really difficult to break out into different categories and use sort of industry standards on a Class C. And so that really, we had our lender underwrite it and get a term sheet out to these guys at a more reasonable NOI. And that allowed them to, reach up to 80% loan to cost on this deal.
Great.
Yeah. So yeah, just to continue the story, right? So then I kept my appointment after seeing this underwriting that James shared, that one of the lenders did. I believe that's Daughtry or somebody like that, right? So then I got a little bit confidence. Then I went and toured the property, absolutely loved it. Nick did a very good job in actually showing the opportunities that I have, the location that I have. There's a part of the property which actually sees 80 directly, but that is not being used at all. There's no sign also there. You have that much exposure to 80, and we plan to use it, right? So he called out opportunities like this. And then just before I leave, I went into the office and asked for, okay, can you give me the current rent sheet, right? I looked at it, I didn't pay much attention, came home and then opened it. Oh my God. I mean, from the time the OM was written till that point, I think maybe it's like good 2.5, 3 months by the time, and the rents already went up. And I'm not talking about the rehab units, but the classic units. They went up by a good $30, $40. Now we plug in those numbers and boom, it started working. We have that confidence that we'll get good loan proceeds at the time. And then immediately we took it to me and Ramna, we took it to Brad. And then Dante Andrade is a broker in Brad's organization. So those guys spent several hours because again, the T12 is the problem there. So we went line by line, actually separating out these expenses, operating expenses from capital expenses, underwrote it, and then just to be sure, right? I mean, we got to be like really sure with this because it's a large transaction. That's when we requested Ryan Wayner. He does the property management for about 10,000 units here in the DFW area. So we approached him and asked that, hey, can you actually put together a budget for us? And also, can you please do a market survey just to validate what all we have done work so far between us and Brad, and then the numbers matched, right? I mean, he came with 1.6. I just, for the expenses, and I added another $50,000 as a buffer, and still the numbers work, and it's all go from that.
So you did your first deal in Oklahoma City or Norman, Oklahoma. What month was that?
We closed in June.
So June of 2016, and
That's
then you
right.
did your first deal as a lead on your own in October of 16, and we're in early February of 17, and you closed on the deal. How much money did you raise on approximately? How much money you raised?
$6.5 million so far, all three deals combined.
What was the last deal?
The last deal is TradeWinds, 3.6.
So you're sitting here 10 months ago, you hadn't known anything, and then you did your first deal on your own, maybe 3-4 months before, and then you raised $3.6 million. What's going through your head, or what's some of the challenges? I mean, that's to someone who's listened to this podcast who's never done something like that before. Probably have a lot of fears and anxieties, and I'm sure you guys did too as well, because that's a lot of money, right? It's not like pocket change here. That's a lot of money. So maybe kind of talk about your mental state on how do you go about get yourself prepared to do something like that and go out and execute and raise that kind of capital with somewhat limited experience.
Sure. When we started for the first property, even 1.2 million was a big task for us. We weren't confident that we could raise for a 3.6 million property. We have other partners' experience, Justin Martinez, but we were really, can we raise it? Can we raise it? So we did prepare a very good webinar. We invited most of the Brad students and some family and some friends who are interested in the multifamily real estate. Surprisingly, we got more than what we required. So we had to return to investors' money. It's kind of bad to return any investor's money because they won't invest with you anymore.
So you had to return money on the first equity raise you guys did?
Yes.
Is that right?
Yes.
Yeah. So what about the second deal? How much easier was the second deal from the first deal?
I would say that it's a lot easier. Again, on the first deal, just to close out that conversation, right? So again, we are doing this for the first time, right? And for all purpose, we are co-sponsors along with the other experienced gentlemen on our first deal. But we didn't expect that you have this much oomph in the group that we are in, Brad Samrock's group, right? We have no idea that people will just wire you $1.2 million, right? So we learned our lesson, right? So we started controlling the wiring information on who we are going to give the wiring information so that and especially towards the end, we can manage the flow of this cash coming into our account into a trickle, not just like a big pour, so that we don't overshoot here. So one thing we run into with Arizona is that it's a new market as far as our group is concerned, right? Nobody did a deal in Phoenix before. So it's like, oh my God, it's a new market. That's the state of mind for our investors. And also what happened is that Arizona has a tax, right? I mean, they do have a state tax, state income tax. So that might be a barrier for some of folks. So we are supposed to raise 1.88 million, 1.878 million to be exact, right? So that's what we raised, and we fell short about $300,000. When I say short, we didn't make any active calls, right? So we conducted the webinar and let the wires come in, and this time we didn't overshoot. Actually, we are short 300. We still have plenty of time to actually for closing. That's when we reached out to our mentor Brad and Brad, what do we do right now, right? Because again, you have to remember, first time we didn't call anybody, so we didn't know how to call, what to say, right? I mean, didn't feel really comfortable asking money that way, like calling somebody and raising money. So Brad gave us some tips. Basically what he said is, Venkat and Ramana, did you guys talk to the guys who attended your webinar? You have their email address, their names and all that, right? But haven't invested yet. No, we didn't. And he said, why don't you give them a call? They know what's your deal, and those are the best people that probably would invest with you. And then he said that the people who are already invested, did you reach out to them and make an offer saying that, hey, and at that time, because we weren't sure about the 75%, 80% thing, right? I mean, like I described before, suddenly we got a news from James saying that, yes, we are all good. We're looking good for 80%, right? So we started underwriting at 75% LTC, but when I bumped up to 80%, because James confirmed that, yes, you're good for the loan for 80%, and our projections went up for the investors. So well, we have some new data that we need to share with investors, which we didn't have 2 weeks ago when we did the webinar. So that's when we started calling few people, and we just raised the 300,000 short, just like that in a week.
So then tell me about the process on the last deal you guys just closed last week, the TradeWinds deal. How quick did that go compared to the previous one?
It's kind of same. We built the track record with the first two properties. That helped us with webinar, like almost 80, 85 people attended the webinar. 100 people. And, the deal is in heart of Dallas Metro, Mesquite.
Which is where most of your investors are located as well, right? So it made it a little bit easier.
So going into the deal, I told Nick one thing. Hey, Nick, if I get the deal, I'll make sure that you're proud of us, right, as an investment team, me and Ramana, and we'll do exactly what we say we will do. right? We will not come up saying that I need extra money, extra time to raise some more money, things like that, right? So execution is really, really important because the seller is from New Jersey on the Tradewinds deal, and they have kept a different property under contract. And they were hoping to actually refi Tradewinds and take those proceeds and buy that other property, but Tradewinds didn't have priced so much as what they're thinking. So that's why they ended up selling it to us, right? So as you can imagine, the execution is very important. So we were a bit nervous, right? Well, we raised 1.2 without any issue. We raised 1.8 million just 3 months after with a little bit of issue, but we got through the hump. Now we are talking about raising 3.6. That's twice what we raised before. Yeah. And we just want to be sure, right? So we spoke to some other strong investors who could raise money. And we told them, hey guys, today I cannot bring you into the deal. But once I start raising money, if I need your help, I'll cut you in, I'll make you a co-sponsor, and we can help. So we have 2 people on standby who can potentially raise $1 million to $2 million all by themselves because of their networks and all that. Because again, we don't want anybody to be at risk here, right? So we hedged our bets here. Then we went into this webinar. The 100 people attended, right? I had only 100 licenses, probably more. Try to attend, but from next time we're going to buy 500 licenses now because we didn't have even 100 for our second deal, but now we crossed 100. So when this happened on the January the 4th, when we did the webinar, just 10 days right after we have all the commitments, and about 15 days after that, we have all the money in the bank.
So you raised $3.6 million, had it in the bank in a little bit over 2 weeks.
That's it.
Yep. Yeah. So I think that's inspiring to someone that's trying to break into the business and grow, that this business is scalable pretty quick and that everything's relative. So it's like a relative experience compared to the people you're raising money from. And now that you've done, you had 2 big deals under your belt, kind of one as a co-sponsor, one on your own. And now you're the expert on your third deal 10 short months later or whatever that was. So that's pretty impressive. So hats off to you guys that, able to do that in such a short time period.
Yeah, those are some big deals. I know we've talked about this offline, but maybe tell us about maybe some of your goals for this year. And, obviously this is a great way to start the year. And tell me about some of those goals, and then also talk about maybe some of the things that you're going to do to get there.
The one good thing about being in a group is that you're not in a silo, right? So our group has this Facebook page. As a matter of fact, yesterday I saw somebody put a deal under contract in Waco 2 days before somebody else in Oklahoma, 2 days before that. So this motivates you, right, in a healthy way, right? And it makes you feel competitive in a healthy way. So we have that ecosystem in our group. And if 1 year before, if you tell me that I would do all this $27 million in deal and sit here, I would tell you to go away. There's no way, right? But now nothing is impossible, right? Because our mentor, Brad, he himself, he just doesn't preach and leave it there, but he does these big dollar deals as well. So he kind of demystified it. You don't need to be special or anything to do all this. Anybody can do it with proper education and the network. So to answer your question directly, James, this year, our humble goal is to do 50 million in deals. I don't know, but we want to shoot big this time, right? So 50 million because we did $27 million in our rookie year. So it will only be fitting if you do deals in $50 million. But then again, see, being aggressive is one thing, being careless is another thing. We want to be the aggressive kind with care, but not to be the other kind. The luxury, again, we have here is every deal we underwrite, right? From the point we do the underwriting, from the point we do the LOI, from the point we do the PSA, all the way to closing, Brad gets to actually see what we are doing. And with all his experience, he guides us and don't let us get ahead of ourselves, right? One quick example, right? So the reversion cap rate, right? What is that? So that is the cap rate at which I expect to sell the property once I execute my business plan. Usually in our group, we have 5-year business plans. So that's the parameter, right? Let's say we buy a property at 6.5 cap. I cannot assume that 5 years from now, I'll be able to sell the same cap rate. Right? So one of the things Brad teaches us is that, hey, you have to be conservative. Traditionally, Dallas was sold at 7.75 on a C-class property. So he limits us from using any other cap rate than a 7.75 if it's a Dallas C-class property, right? So that's a good and bad, right? So good is that we won't walk into a landmine here, right? I mean, we buy at 6.5, and if we cannot sell it at 6.5, then we will be losing money there. So that's the good, right? So it stops us from overextending ourselves and when we are writing these offers. So that's something Brad helps us with that.
Perfect. Ramadan, what's the one or two things that you do on a weekly basis when it comes to multifamily?
We have 3 properties. So we pre-scheduled all the meetings with the property management companies. We want to make sure the Capex plan that we put in before getting into the deal, we want to execute exactly same way. And also we want to keep a tab on occupancy and rental increases. We want to make sure we are going along with the market trend. If there is any deviation that we see, we have to act quickly and make sure we are back on track again. So we spread out our weekly calls with all the property management companies. Fortunately, we've been working with good, reputed property management companies, so that's helping us as well. On top of this, we have to be on the lookout always to find the new properties. So we spend on existing properties, make sure everything is going right, and always looking for new properties.
As we wrap up here, any advice maybe that you would have told yourself 12 months ago, or even to someone who wants to sort of accelerate their learning and get into this business quickly? Any advice for those aspiring multifamily investors out there?
Sure. What I would say is 2 things, right? Number 1, get a good mentor. There is no reason one has to do it all by themselves, figuring this out, making every mistake in the book. Theoretically, yes, I could have done all this with myself without Brad's help or anybody's help in next 50 years, right? But now look at me. We did all this in 10 months, right? So how is this possible, right? You always need to have mentors. Some people just don't do it this way, but I strongly recommend people to get a good mentor, not just somebody who just teaches, but somebody who practices what they teach as well. Somebody like Brad in this business, right? And the second thing is goals. Brad is very big on this, right? He spends a good portion of January talking about goals. If you don't have a goal, all you have is a wish. Wishes may or may not come true, but goals often get met if you're serious about the goals and if you're realistic about the goals you met. So these are the 2 things I would say to new aspirants: to get a mentor, set goals, and stick to them.
Any funny stories about owning an apartment building?
Actually, in our Norman, Oklahoma property, what we saw there when we arrived there was we were expecting to see a property manager at the location. This is just after we wrote the LOI, right? So we went into the office, all we saw was a fax machine. So fax machine, for all purposes, is the property manager of that property, because the seller, there are actually 2 partners. One is a rap artist who lives in Manhattan in New York, and the other owner is a couples counselor who lives on the West Coast. So one East Coast guy, one West Coast guy who has non-real estate related businesses, right, chose to do a deal in Oklahoma. And you could imagine how it would run. And to top it off, this fax machine, right? So the owner has set up a way that if you need anything from them, the tenants are encouraged to take a paper, write stuff up, and just send a fax from that fax machine, and they would somehow manage it afterwards. So I found it really funny. And then to top it off, once we purchased the property, so our first visit there, after we purchased the property, we wanted to meet the lead maintenance. And we were waiting for the lead maintenance to show up in the office so that we can talk to him to understand what are the current problems, what are the priorities, and all that. So there was an older gentleman walked up. He was walking with this walking stick, and he has, this brace. Yes, the neck brace. And he could barely walk, right? I felt very bad, and there was no chair, and I offered him a chair. And he said, "No, I'm fine, I'll stand." Then he was asking, "Hey, so what's up? What you guys here for?" And he said, "No, we're waiting on the lead maintenance." And he said, "Yeah, I'm the lead maintenance." So I was like, yeah, that was another funny story.
Takes all kinds. Certainly the upside. I've never bought a property from a rapper, 1,500 miles away. So that's a new one. I've never heard about that. So
Yeah.
Anything more, James?
If people want to hear more stories like that or hear more about your deals, what's the best way for people to reach out to you guys?
Again, they can reach me at my cell phone number. That's the best way to contact me, 281-727-9238. And my email is get, number 2, Venkat, Venkat, @yahoo.com.
anybody can reach me at my cell number 214-799-9127. Either call or text is fine. And my email ID is rmkorada@yahoo.com. rmkorada@yahoo.com.
I love it. So some great information. One of the things that these guys led off with was scalability. Scalability, and that is such an important thing. You guys, Venkat, you own 20 homes.
Yes.
And you saw that you couldn't go any farther because you couldn't scale it. And now you own 500 units under 3 different rooftops. I mean,
Three different states.
In 3 different states. So scalability is definitely possible when you do multifamily properties. So we appreciate you guys being on the podcast. Thanks very much for your experience and kind of telling everybody a little bit about how it works. James, tell us a little bit about what's coming up for Old Capital.
Sure. Number one, Greg Willett's going to be here in Dallas at the Grapevine Convention Center March 8th. And if you're on our email list, there should be a link there to RSVP for that event. And then also in April, towards the end of April, we're going to have Mark Dotzauer, former economist for the Texas Real Estate Center down in A&M.
Both those are 2 meetings that you do not want to miss if you want to make a position in Texas. You want to kind of understand a little bit about what's going on. Greg does a wonderful job about really just talking a little bit about apartments. What's going on with rent appreciation? What's going on with amenities? I mean, he is an expert in apartments. You would really want to be there. And then Dotzer is he's fantastic. Brings it down to the bottom shelf that everybody can understand. We want to make sure that you're there. And don't forget is that with that you get an opportunity just like these 2 guys had with networking. So we start networking, I think, at 6:30. Then the speaker comes out about 7 o'clock or so. But it's really a great opportunity to meet similar-minded people that want to invest in apartments. Also, too, James, what else?
If you haven't gotten our white paper on apartment financing, send an email to info@oldcapitallending.com, info@oldcapitallending.com.
Fantastic. Ramana, Venkat, we appreciate your business. We appreciate you kind of telling the story. James, thanks for leading the team. Thanks for wearing your white hat with the white horse again and helping these guys out, putting together these transactions. And, of course, Michael Becker, thanks for hanging out with us.
Thanks everyone.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.